I would say, I know, again, I usually will say with each CPI report, I'm like, this is really huge. This is really important. It's always really huge, really important. But here is something that's really key about this CPI report. We have a scenario right now in which case jobs data is pretty convincingly starting to slow down. We see unemployment rate rising in the US. I'll show you some stats in a minute, but take my word for it for a second. We see jobs data coming in soft, okay? NFP, ADP, we see unemployment rate, we see jobless claims. We see these things on the rise or on the fall, if you will. At the same time, where are we at with inflation? Because guys, here is the key. If you want this to all kind of pan out okay in the end, if you want to see stocks higher, the US economy stay strong, stay on top, and that's good for global growth too, not just the US. If you want to see global economics continue to look prosperous, we need to see something happen today. We need to see inflation continue to come down. Now, what I mean by that is right now, inflation has showed just some progress of slowing. It's not remarkable. It's not awful. It's somewhere in between, in my view. Okay. So if we have jobs data coming down, okay, that's fine. Jobs are not in a bad spot, but they could get to a bad spot if things on the interest rate stuff doesn't change at some point in the somewhat near future. The jobs data overall is pretty strong overall. It's just coming down. Now, it's like this, right? It's coming down. But if it doesn't get some, pause in the form of lower borrowing costs and a, rebounding economy at some point, this could actually accelerate. That's the concern for the Fed. We're not here. I'm not saying, jobs market is crashing, but we're like here, right? So we need to see inflation come down in order for finally interest rates to come down. Okay. So the question, once you start piecing this puzzle together, you say, so CPI today is really important. Because what happens if you get this? What happens if you get this? What if you get inflation going up before we even cut interest rates? No bueno. Not good. Because in that case, what you have in that scenario is you have stagflation, right? We don't want to see stagflation unless you're long gold. But, stagflation could be really concerning because then you've got, oh my gosh, the jobs market is slowing, but inflation's not going anywhere. The market does not want to see that today. I can tell you that right now. The market does not want to see inflation surprise to the upside today. They would hate it. The NASDAQ, S&P are at all-time highs. They want to see inflation coming down. All right, CPI numbers did come out. We've got S&P moving higher, the Dow Jones moving higher, Nas, Euro, Gold. My goodness. What did we get here? That must have been a good figure. I'm going to guess 3 year over year. Wait, look at the price. Yeah, I'm going to guess 3. Let's see if I'm right. 3 or 3.1, I suppose. 3. There it is. 3. Okay, so the CPI number came in at 3%. That is good news. Good news, good news, good news. All right. I'm not going to lie. I'm going to take a moment here, guys. I apologize for the boasting that I'm about to do. But this is all correct on my positioning. And I'm not always correct on my positioning, so please understand. But right now, all of my 4 trades all look to be in the correct. My thesis here has been correct. Now, I'm saying that because I'm not always right, but this thesis that I've had in the recent few months has really been killing it. Rate cuts probably on the way.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
I know you had a silver position. I also had a silver position. Are you still in that trade?
I am. Yeah, still watching.
Very nice.
Yeah, it seems to be doing very well. It's not. Yeah, normally this. I don't watch day-to-day news really. I more take. So, for example, when I'm looking at a position on silver, for example, I'll look at what's the news releases been over the past sort of 6 to 12 months.
Sure.
So watching day-to-day news isn't very interesting. It's not something that I really take into account. But it's hard to ignore today's. There's a huge move on the dollar. Dollar yen, pound yen, could be some great entries for the long term. But yeah, silver's doing really well.
Yeah, and you made a good point there about inflation data. I want to show this chart here for a second because to your point, this is actually remarkably important today. I'll show you this on my screen real quick. So check this out. One thing that I think a lot of new fundamentalists, they miss about trying to use fundamentals is they only look at one report. But as you've just mentioned, looking back a little bit further, what made this CPI report just resoundingly strong for dollar bearishness and for metals and for the markets in general is that this constitutes the third in a row inflation on the CPI level report that actually looks good. This is showing, and many fundamentalists on Wall Street, they will talk frequently about the 3-month trend of data, right? Because if you look at one, it can blip back and forth. But if you look at kind of the rolling moving average of economic data, it can oftentimes tell a very important story. What we see here is arguably a trend in the direction of the 2% target that the Federal Reserve Chair, Jerome Powell, keeps mentioning that they need to see in order to get rate cuts. Rate cuts means dollar bearishness. It means metals go higher. It means stocks can do okay, so long as the economic data also hangs in there. And so we've got an interesting story here today. I mean, metals just moving high today off of what I would say is a confirmation for many of those big money managers who says, well, there's your 3-month trend. We've got inflation cooling. And it's certainly progress. Now, as you mentioned, gold and silver, we've been having this discussion as a theme today on the show, is like, what do you do on a day like today? And I want to ask you the same question. I mean, you've got some positions that are working well for you right now. What are you doing today?
Well, I'm actually, I saw your segment just before I came on. You were saying, be careful, guys, don't fade news. Yep. I'm doing exactly that. So I'm fading the euro dollar.
Okay.
And I don't want to share it on stream just because I really don't want people to copy it because it's very high risk.
No
I've
problem.
Allocated very specific risk model to it. But yeah, so I am doing that. But again, it's very, very monitored and very managed.
Well, I would say that if I was to go against a currency on a secular basis, it might be the euro. So I can understand why, if you think that it's coming into a level. I'm not saying that you can never counter trend trade, because I kind of am very against like any sort of saying you can't do this and never make money. Like I think anybody can make money. It's not my call as to whether or not it can work or not. However, to your point, it is a high risk trade to try and go against a big data like this, simply because the average true range of days like this is going to be very high.
Yeah, exactly. It's one of those trades where as soon as it's news is sort of corrected, which is one of the things I'm looking for, it'll be a case of closing it immediately. So there was no signal. I didn't announce this anywhere because, again, I don't want anyone to follow it because it's very managed in a very strict way that I don't think I could sort of explain or very easily, especially over like YouTube or Twitter.
Sure.
But yeah, anyway, so apart from that, we're currently in a euro pound short. This was quite textbook, really. We had a gap filled here. Pound is doing very well, of course, due to the political stability coming into the economy. The euro, not too great at the minute, in my opinion. So yeah, it's kind of a simple trade. But yeah, we'll see how that goes. That was also helped by the US news.
Yeah, no, and that's the thing is dollar pairs across the board are well, the dollar is just weak against everything today. Ivan, explain it to us. Where's dollar yen going?
Or this is what I've been hoping for like 2 months or half a year or something. I don't know, something for a very long time. I don't know if it's gonna be. Well, we'll see in a couple of days if it was back in Japan or Minister of Health, Minister of Finance, or anything like that. But it dropped about, was it 350 pips or so or more?
Yeah, that's a crazy drop. At one point, 417.
Yeah, it's dropped more than since I spammed you. But yeah.
Ivan, you know how hard it is to juggle. It's you're trying to read chat while also coordinating.
Chat, it was 10 minutes.
Well, if you had done it for 11, then I would have seen it. I did see it eventually. Yeah, dollar yen. I mean, the question is, Ivan, is support going to break? Because if you get this closing like that, we might see more downside on UJ for the first time in a millennia.
Yeah, also, what can I say? Also, the more the merrier at this point. I just want any support to break, because that will make me have an even better price to buy from. So I see this as a buying opportunity. I see this as fantastic. This is what I've been waiting for my entire life, and probably a bit more on that. So currently it's highly volatile at the moment, so there's nothing I could do at the moment. But give it a couple of days and you'll see what happens.
Yeah, I was gonna ask you, you're not buying it today, huh?
No.
Okay.
Catching a falling knife, Nick. I need 500 pip stop loss for that.
Fair enough. So what's the game plan on the yen pairs?
Buy the dip.
Okay.
So very long answer, short. Looking for new higher high and higher low. So somewhere in that direction. It's probably gonna take a couple of trading days to do it. It can also just shoot back straight up and then leave me in the dust. But yeah, I'm excited.
Yeah, it's nice to at least see a pullback finally on this thing. I mean, this thing has been, I was talking about earlier, it's almost like a month-long retrace, or a month of upward trend was erased in just one day of pullback. And this seems to be, some people were wondering, is this yen intervention? But I think it's just the CPI, right?
It's beyond CPI, because if you look at, I don't know, I haven't done that. I didn't do that before I did, but if you give me 2 seconds, I can add everything together. Because if you look at the other pairs, I'm just going to do that very quick. They didn't move half the pips. So Euro has moved.
Okay, yeah, that's a good way of checking.
Like, it's 50 pips. Aussie has almost back down to 0 now. It was 43. Pound was... Okay, sorry, about 70 dollars Swissy that you had up. Did you trade dollar Swissy?
I'm short on it.
Okay, and then that one moves 55. And dollar yen has moved, what did you say? 200, 300, 400.
Like 415. I think, in fact, we should check this, but I believe it is probably very likely that we now see expectations for a rate cut in September. They already were forecasted, but there it is. An 83% chance, a 90% chance that we get our first rate cut by the September 18th meeting. That is the highest I've seen it personally since, well, the last few months. So seems like, and then if we go take a look at December here, the December meeting, December 18th, there is almost a 100% chance that we see our first rate cut by then.
Or even 2, but
or even 2.
But yeah, no, that's this for me. I haven't given my 2 cents, I guess, today, but my 2 cents is this puts the nail in the coffin for any rate hikes and secures the position of a rate cut. The only question is when. I don't know, but also this is very funny by Powell. I think this is by design, by force. Going into his conspiracy theories that he had earlier today. And he spoke before CPI, not after, so he doesn't need to comment about it.
Yeah, that's a good point. There's a conspiracy. Did he know something about CPI beforehand? He did sound very optimistic in his last few congressional hearings or his Capitol Hill moments. So I don't know, but we'll see. I mean, clearly markets are reacting. You've got the Russell 2000 up 2% today, while the other indices are pretty flat. So, clearly this is the rate cut sensitive one. The Russell is flying high off of this data. You got gold and silver moving higher. Oil is dropping. Yields are dropping aggressively, which, to your point, nail in the coffin about rate hikes, but even nail in the coffin, I would say, for rate cuts this year. I mean, now it is, as we just saw, at least from Fed futures, Fed funds futures, the expectation is 1 to 2 rate cuts by December. So we'll see. But this has been just kind of a all-encompassing round of data for the rate cut story. We talked about this a few weeks ago, Ivan. You and I were both like, maybe July. But actually, what is the probabilities for July? We didn't check that. Let's see.
It was.
Yeah. Okay, so not likely. But the probabilities for September have greatly increased. So we'll see. But as you mentioned, where does that take us with the other central banks? Can you give us, Ivan, an idea on, we're talking so specifically about the U.S. Situation today, but globally, we saw something interesting out of the RBNZ. We saw the New Zealand Central Bank have a bit of a dovish tone recently, and we also see, kind of a global stage that looks interesting too.
Some very, very big movement on the euro and the US dollar, a big explosion up, which is really good to see. So I'm definitely going to look for buy setups. I'm not in any trades. There was a half decent buy setup here, but I didn't take it in the end because it didn't fit the plan. But right now I'm definitely going to be looking for buy setups, especially if this candle can close with a nice clean close. So with no wick. EJ is just, I don't know what the hell is happening with EJ. I'm guessing this whole move is kind of exhausted because it has been trending up for a really long time. But I did not expect a drop as big as this one. So this is like,
whoa, the yen pairs are insane. Dollar yen's down 1.8. Oh my god.
Yeah, like 268 pips. So that's massive. That is huge. I'm going to look for sell setups, but I'm not really convinced that this can continue with clean price action. And my stop loss is probably going to look tiny. I use 12 pips. Yeah, it's going to look pretty small.
You know what that is, Marco? Just to touch on that, because I'm trying to think about like what's going on with the yen. Why would that be so crazy? Well, I think just a high level note on that is the dollar dropping off makes the yen relatively look like a place for investors, because a lot of people are, they're buying like US bonds, or they're buying like today, clearly US bonds are being bought because the yields for bonds are falling off a cliff. There's a lot of correlation between the 10-year treasury bond and the dollar yen, because again, you have this kind of stake for wanting to buy something stable. The yen may be looking a little bit better today because the dollar is looking pretty weak. But keep going. I didn't mean to cut you off. I was just thinking through that.
Yeah, no worries. That's interesting. But basically, I can't do much with this. This is absolutely huge. So I'm going to need to see some follow through on this candle. I will put it on the watch list. AU also had a buy setup right here, like a flag. But again, it didn't fully fit the plan, so I did stay out of it. It was basically right here. And now I'm starting to see some really nice momentum. So 100% going to look for buy setups on the Aussie US dollar. If we can close with a clean close, if a huge wick prints here, then that is going to be a massive warning sign. AJ, I took a buy setup was a small winner, like 1.3%, then got taken out in the morning. Fortunately, got taken out before this huge news scandal, because it would have been probably stopped out for a lot more than I initially risked. Because
Oh yeah, some slippage.
yeah, I think I would have been slipped like 20, 30 pips, no problem here. So yeah, good thing I got taken out a little bit higher. Right now, same story as EJ. I'm going to be more patient, and I would like to see some follow through in the next hour. But I am going to put it on the watch list. GU is looking very, very nice, as are all of the dollar pairs, especially with the current formation of this candle with a clean close. It's printing some massive, massive momentum. And yeah, I'm 100% going to be looking for buy setups. Very, very interested in buy setups. Final one on the list is going to be NJ, and yeah, same story basically as all the JPY pairs. So a lot of movement everywhere on all 6 of my currency pairs.
Yeah, so I've been looking for some dollar weakness, and I was kind of hoping that today will kind of give us some dollar strength, because I wanted to see a bit of a pullback so I can short it. But yeah, dollar absolutely fell off a cliff right now and is looking really, really bearish. In terms of like the dollar crosses, I'm really excited for pound USD, because we've seen a huge breakout here. And we've been pretty much in a range for the whole year, pretty much since 2024 started. So if this is a breakout, then we could actually see maybe a rally back to 1.31. And if dollar keeps falling and pound keeps its strength up, we could be seeing a lot more upside. So I'm looking for some pullbacks on pound USD. I think dollar CAD looks like it might be breaking out. I think CAD's a bit strong, but if that one could break the floor there, that would be really interesting as well. And same with Aussie dollar. This was looking really strong. Looks like we're getting a really nice, healthy breakout as well. This one's been in range for a while. So pullbacks is the aim for me. Missed out on some gold and silver opportunities. I've been looking for pullbacks for them, but it hasn't quite fit my plan yet. I still think there's a lot more upside to them. Silver's not quite the high yet, so there's still opportunities there. And gold's still got a long way to go back to the high there too, but it's looking absolutely phenomenal. So if we get some pullbacks maybe next week, I'll be 100% looking to get some opportunities, but might miss the boat.
I think path of least resistance, like you're saying, is pullbacks on these things, unless something new comes along. But I mean, this was it. I mean, this was, in terms of data points that the market was looking for, this was it. CPI plus NFP both coming in cool means a really weak dollar. So I feel like, well, not even I feel like, I think that most likely the dollar index will continue lower. Now, will it have volatility and pullbacks within? It certainly will. Like, there's no question it's going to be having some movements both back and forth. The question is, does this continue? I think most likely yes. But the thing for the dollar index that I see, and I'm curious if we can see this, is the break of 104. Last time we hit 104. Last couple times, this was really the spot that couldn't quite break, and so now we're coming into that level of resistance, support right away, and we'll see how the dollar reacts. You mentioned the pound also. What I thought was worth mentioning is that this is actually for the year of 2024. That's the high. So we have not seen the pound trade against the dollar at these levels since 2023, as you mentioned. I think 1.30, or even 31, like these levels. That's the high of last summer. So it's been a full year, and we might. I mean, there's an argument here with all this pound strength. I mean, look how convincingly that broke through that level. You might see a kind of bull wave cycle here. And I think what would maybe get us started there would be a break of that 104 level on the dollar. So we'll see. But again, as you mentioned, metals pushing higher. A lot of things are moving higher today. And I guess last thing I want to ask you guys, because I know it's relevant to so many people in the audience right now, let's give some tips. I know you guys both, we've done this conversation before, but Marco, Miko, if you're someone on the sidelines today, if you are watching these ginormous moves and you either got stopped out or you don't have any positions, I know, so you guys both mentioned you're not totally involved, so maybe this is even easier to answer right now. Like, what do you do? Because you guys have been doing this for a long time. You know, just like I do, that today is not the defining moment of you making it or breaking it. Like, you know that there's going to be more opportunities. But I guess, Marco, what are your thoughts? To somebody who's feeling FOMO, someone who's like, I just missed everything, what do you tell them?
Well, I think you haven't missed much, because trends can last for a really long time, and they can like be in thousands of pips. So it's all about being patient. And let me see how the candle closed right now on EU. Just quickly open it up. So on EU, I can see that it's an okay close, nothing to write home about. We got a huge wick in the end, unfortunately. I would have liked a cleaner close, but it is what it is. So I would need to see the next candle continue with the momentum. I would definitely need to see something like that for me to be interested in buy setups, because usually these candles with a huge wick on the top and huge wick on the bottom signal overall indecision and range-bound markets. So for me, it's all about the next candle. If the next candle can continue up with the momentum, close with a clean close, I will 100% look for a buy setup with one of my entry patterns.
Sure.
So, and yeah, for anyone that thinks that they missed out, this is just like a 50 or 60 pip move. That's nothing. I mean, markets can clearly trend for much more, right?
Yep.
You can get movements of 200 pips, no problem, in just a couple of weeks.
And that's a good thought process to share with even somebody who is like, oh, I just need to short these moves. Like, you also have to be careful, because this just came out with stellar data in the favor of the bulls. I mean, if you're wondering, why is gold moving so higher? It's got to come back down. Well, it's because all the data just hit it out of the park on that one. So yeah, I mean, it's what the doctor ordered. Be careful trying to fade these moves. That's my opinion on that. Miko, what do you think? I mean, you've got big moves happening today. If you're feeling left out of the move, feeling some FOMO in the audience, what do you tell them?
Yeah, I mean, I think just look at the bigger picture, because, you know, I've been trading for quite a while. This is not the first big move I've seen. It won't be the last. Even we had one last month. We'll probably have another one next month and the month after that. So if you're looking at the charts and you're already zoomed in, then it kind of looks like you missed out on something big. But yeah, we'll see this continuously for the rest of the year, pretty much. And also, I would recommend maybe limiting your chart time as well, not being at the chart so much, because if you're not at the trade and there isn't a trade that's about to be taken, then really you can set alerts and go about your day. You don't need to be looking at the charts, because if you look at the charts for too long, it's gonna make you do something that you might regret as well. So maybe limiting the chart time might help with that FOMO as well.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.